All right, guys, welcome back to another Chris Trade Weekly Review. So I couldn't get one out last week because it was my kid's birthday. I've got twins. They turned 10 and decided to take them camping out into the bush. So that's why I couldn't get a weekly review out. So I've got a little bit of catching up to do. But I want to explain why Bitcoin ended up doing quite a massive sell-off. And we're sitting currently now below 50K right now. And it's not really what you think. Now, yes, this happened predominantly on Thursday and Friday, coincidentally with the rumors of Joe Biden looking to tax the rich and things like that. It's really got nothing to do with that. There was also, rumors of the hash rates, shrinking. In other words, some of the mining companies in China going offline. Again, that might have played a bit of a catalyst, but that was not the main catalyst of why we're seeing a healthy correction right now in Bitcoin. So I actually want to speak to facts, and I want to show you some actual facts why Bitcoin is sitting below 50K right now. So this is a graph from Coin Matrix, and pretty much this graph is the liquidations on Bitcoin's perpetual contract. So this is the derivatives market. You can see this particular red line. These are the longs that got liquidated. Okay, so what happens is you had margin traders, and they were sitting on 20 times margin trading, in some cases 100 times margin trading. And this is all the spin-off in terms of guys leveraging up with the IPO listing of Coinbase. We did see a melt up in terms of Bitcoin with that IPO listing. Yeah, they ended up getting killed. So that's why you saw such a healthy correction in Bitcoin currently right now, and why we're sitting under 50K. If we have a look at sentiment right now, you're going to see this is Bitcoin's drop below 50K support leads to Twitter's sentiment at its most negative in 7 months. Now, you should be smiling seeing this actual data. The reason why, you've got the market in fear, uncertainty, and doubt right now, that tells you this is perfect buying opportunity. This is a buying indicator. Where there's fear, you be greedy. Where there's greed, you be fear, as the saying goes. So this is fantastic buying opportunity right now. I want to take you to another graph. So this is from the Rational Roots. I'd highly suggest you actually follow him on Twitter. And he produced a very lovely graph here. And it's another indicator, if proven correct. And what he did is he took 2013 and 2017 bull runs and has compared it now to 2021. And you can see it is so similar to 2013 and 2017. And if this is all correct, again, you're expecting to see a rise and continuation in the bull run of Bitcoin. And we're not even close, again, if this is correct, in its ultimate melt up in terms of Bitcoin for this year. So this is just another indicator, another data that's kind of been presented right now. And it's speaking quite well to the FUD that's currently occurring, because that is a perfect buying opportunity. So I am expecting Bitcoin to carry on in its bull run. It's, again, go and buy some Bitcoin. Okay, so the biggest thing right now is inflation. I mean, there's inflation everywhere. And I'm going to speak to some data about that. But it says what will happen to inflation in 2022. The idea that inflation will rise above the Fed's 2% target this year no longer is controversial. Okay, because the Fed is projecting that inflation will soften next year to 2% after hitting 2.4% rate this year. So we're already over the Fed's target of 2%. Now, I'll give Jerome Powell some credit because he did mention it will shoot over it, but then it should soften back. So where are inflation this year? Next year is going to be the telling whether the Feds can rein it back into their 2% target. Otherwise, yeah, we could potentially see rates go as high as 3%. So again, I'm going to speak to a little bit of data about that. Even the Bank of Canada, inflation forces Bank of Canada's hand ahead of the Fed and ECB, the Europe Central Bank talks. So this is a big concern now for Canada. But let's have a look and see what's happening in terms of inflation for the rest of the world. So this is the food and agricultural index, and you can pretty much see that the food price index rising for 10th straight month. So your food consumption, well, the food pricing is actually rising up worldwide. So that's telling you that worldwide inflation is starting to hit. And typically you will find this within the food as an indicator for this. It's going to be very interesting to see how this plays out for the rest of the year, because this is going to hamper the emerging markets if they are hit with inflation, and it's going to have a potential issue in terms of their economic growth. So we are in inflation, and globally we are entering into inflation. You've got to start looking at where to hedge your bets now. Now, typically gold and typically Bitcoin, well, Bitcoin was designed for all of this. So this is just another indicator for Bitcoin to go up as a safe haven. But gold will also ultimately play as a safe haven. But it all depends on that 10-year Treasury yield, because as I showed in my previous videos, there is an indirect correlation between the 10-year Treasury yield and with gold. So just watch out for that. But a lot of fundamentals are actually lining up more for Bitcoin than really for anything else. What this is also telling you from an inflation point of view is the US dollar is expected to carry on in its downtrend. It's not going to be getting any stronger. Right, this is another article. Yeah, global markets stock up after the tax scare and oil gains. So, and these are the fundamentals that is actually currently being played out. So as you can see, the S&P 500 recoups all of Thursday's loss, and it would do that simply because when the DXY goes down, money floods into the stock markets. When the 10-year Treasury yield goes up, that means that there is sentiment in the confidence in the economy. Therefore, money goes into the stock market, and it typically plays against the gold and against the DXY. And on top of that, you've got oils going up itself. So again, this is just more indicators why the stock market is just going to keep going up and up. So crude oil prices spike on fresh attack in Saudi Arabia. So yeah, I mean, oil loves war at the end of the day, so I'm not surprised that oil has gone up. But yeah, you can see crude oil up by 1%. Brent oil is just under 1%. Yeah, so it's doing fairly well. And I must actually do another video focusing on oil and why we're entering into 12-year bull cycle in terms of oil. So I must actually do a dedicated video on that. And if we just have a look here on agriculture, yeah, I mean, coffee's up, sugar's up, cotton, wheat, oil, everything's up here. So again, this all speaks to inflation at the end of the day. Right, so let's have a look at the energy markets in terms of next week now. So you're going to have Cushing stockpiles, you've got crude stockpiles, gasoline stockpile, natural gas storage, which is happening on Thursday. Friday, Baker Hughes weekly survey on the US oil rigs. So this is one of the talks that is going to be happening from Monday, Tuesday, Wednesday, and Thursday on the energy sector stockpile, but there's more to it. Let's have a look at more week ahead calendars. So Monday, we're looking at earnings being released from Tesla, Canadian National Railway. If we go down, we're looking at Tuesday. We've got Microsoft, Alphabet, Visa, got 3M, Starbucks. So this should be quite interesting. But the biggest thing to look out for is definitely the consumer confidence side of things. So that's going to be talking to inflation. It's going to be talking in terms of sentiments about the economy. Wednesday, we're looking at Apple, Boeing, Facebook, Ford. So a couple of big hitters, Cheesecake Factory. And then the most important one, again, is going to be 2 p.m., the Fed statement. And again, 2:30, Fed Jerome Powell's briefing. But come lunchtime, you're going to actually see movements going into gold as a bit of a safe haven there. So I'm expecting to see a bit of a increase in gold at that point. But then again, Thursday, you're going to see the stock markets going back in terms of Amazon releasing, McDonald's releasing their reports. We got Friday earnings. So the energy sectors, Chevron. And it doesn't just stop there. I mean, you've also got the OPEC's meeting. It's not mentioned here, but you've also got the OPEC's coming up this week, and that's going to affect play on the oil. So again, we've got a very, very busy week ahead in terms of what's going to be happening in the stock market. So pay close attention this week, and you'll be able to find some opportunities here. So I wanted to just end off the week report here, and pretty much this bull market is far from over, pro se, where they're investing now. So, and I agree with that. I think the stock market is going to just keep going up and up for the rest of, for this year. Yes, there might be some corrections here and there, but I do believe it's going to go up. I don't believe that any form of bubble this year in terms of the stock market is going to be popping. Potentially 2022 is where we could see some devastating effects there in the stock market. But I think for this year, the economies are coming, people getting back into work. The economy is looking to, rebuild. So I'm not seeing any potential bubble for this year, at least in terms of the stock market. Anyways, guys, that is my wrap up for this week. And we're going to have a very busy week coming up. And I hope you enjoyed the video. This is Chris Trade. Be safe. Peace out.